Hey, have the recent headlines that you're reading about in the news about the San Diego housing market, you know, cooling off or buyer demand going away, if that has you worried about whether or not you missed your chance to sell your home, this is what you need to know, okay? Buyer demand, it hasn't gone away. There's still plenty of people out there looking to buy a home for their families, and and frankly, they're looking to escape the trap of rising rent rates. Hey guys, my name is Jesse Morrison, and I protect families and their finances through the home sale process here in San Diego. If you'd like to know how we can add tens of thousands of dollars to your bottom line when it comes time to buy or sell your home, please visit the website at the link below and apply now. During the pandemic, mortgage rates were at historic lows as the Fed tried to stimulate the economy. But this year, things are quite a bit different, right? As we've been experiencing massive amounts of inflation, the Fed is trying to fight that inflation by raising interest rates. With the raise of interest rates, though, people can't afford to buy homes quite as much. But that doesn't necessarily mean that buyers aren't still looking to purchase homes. So look, guys, this graph here allows us to figure out how much demand there really is in the market. Here's the definition right here. It says, this graph indicates what buyers are willing to spend with relationship to listing price for detached houses in San Diego. So what this means is that if buyers are willing to pay more than what a house is listed for, then this graph will go above this 100% mark, all right? And as buyers are less aggressive, meaning they don't want to offer as much as what you're asking for when it comes time to sell, then the graph will stay below 100%. There are a couple things about this graph that are super interesting to me that I wanted to point out to you. First of all, they're cyclical in San Diego. So like, look at these green arrows here. These green arrows represent the time frames of January to June. And you can see that from January to June, buyers get more and more aggressive, okay? Look, it's just the way it is. From January to June, buyers get more aggressive. And then as June approaches the following January, buyers get less aggressive, right? So that's the first thing I wanted to share with you, is the cyclical nature of buyers' demand. The next thing I wanted to show you was the fact that here in 2021 to current, we saw an explosion of how aggressive buyers were actually being, right? Way more than what's normal, right? Normally, buyers are willing to pay somewhere between, 97 to 99% of the list price. But over the last couple of years, buyers were paying well above 100%, okay? And the last thing I wanted to point out about this graph is that, look, normally we peak in June. This year, when mortgage rates are climbing super fast, we peaked in April, okay? So ever since April, it looks like we kind of fell off a cliff. But look, right now we're at 97.7%. which is right in line with what we typically see for how aggressive buyers are. So look, I want to show you this graph. This graph will tell us if we're in a buyer's market or a seller's market, okay? The definition says, this graph shows current economic supply versus demand as it relates to inventory. So look, this green line here indicates 6 months worth of inventory. And if you look back down at the definition down here, it says that when there's less than 6 months of supply, then we are in that seller's market. And then when there's more than 6 months of supply, then we are in a buyer's market. Well, where are we right now? We're well below 6 months. And I know you might be thinking like, well, how do you know? How do you know it's a seller's market? How do you know it's a buyer's market just by saying that it's 6 months? Well, and this graph here will tell you why I come to that conclusion, okay? Every time this graph goes above the 6 month mark, I indicate that in red. It's the same timeline, right? From 2004 to present, 2004-ish to present. So every time this graph goes above 6 months, I marked it out in red. And every time it's below 6 months, ever since basically 2012, look, it's been below 6 months. That's all green. Since 2012, it's all been in green, correct? So this graph here tells us what prices do during this time of the market, right? So when inventory is below 6 months, prices go up, guys. And when it's above 6 months, prices come down. So red equals buyer's market, green equals seller's market. So guys, we're still in a seller's market. So look, guys, even though we're still in a seller's market, these last couple of years, you just got to remember, these last couple of years do not count. Buyers have been way more aggressive than they ever have been You can't expect to sell your home today like you could, just a few short months ago. So what does this mean to you when it comes time to sell? Have you missed the boat or not? The answer is no, right? We've already established that it's still a seller's market. But you cannot expect to sell like you did a couple months ago. So what do you need to do to make sure that you sell your home for top dollar? One, you got to make sure that's priced right? You have to be seen as the best buy on the block. No questions asked. And two, you got to make sure that you have a home selling score of 85 points or better. I will make another video on how we determine what your home selling score is, but it's super imperative, especially right now, to make sure that that happens. Look, guys, my name's Jesse Morrison, and I help protect families just like you and their finances through the home sale process. If you would like to see how we can add tens of thousands of dollars to your bottom line when it comes time to sell, just go to my link in the description below and apply now. I look forward to helping.